Should you wait to buy a home when the market is not so hot? This report says no, that is a mistake. Let's dive right into it. I've been dealing with, obviously I deal with home buyers all the time, first-time home buyers, experienced home buyers, and the topic that keeps coming up is maybe I should just wait. Maybe I should just wait till things cool off, calm down, and give myself a better chance to buy a home, because it can be frustrating to put offer after offer after offer and get denied, decline. And there's only one or two houses on the market that, fit your criteria of what you're looking for. So I get a report every single week from my title company. Title companies have access to all the data for home sales, active listings, so on and so forth. A lot of different places to get this information, but I get a custom report. This report's for LA County, but you could probably apply it to anywhere in California or probably anywhere in the country. This is happening right now. So we're going to talk about should you wait, or should you just find something to buy now? So according to this report, which I'm going to read in a second, it's going to be very costly to wait. And we're going to go into a little scenario so you can see actually what it would cost you if you continue to wait. So let's get right into it. So after writing offer after offer with no success, many buyers have become discouraged and question whether they should continue to pursue their dream in purchasing a home. Maybe they should wait until the market is not so blistering hot, or until they have a larger down payment, or when there's more homes. The facts and data show this is not a great strategy at all. While it may be discouraging for buyers to continue to pursue in purchasing a home, diving into the consequences of waiting will keep you motivated. So let's keep you guys motivated with this little infographic chart I'm going to show you in a sec. So it's important to focus on the monthly payment in purchasing a home and compared to delaying until the end of the year. So we're going to look at an example right now. Okay, so let's look at this example here. All right, so if you bought a home today and you paid $875,000, which, to get a decent home in LA, that's probably what you need to put down. If you put 20% down, which is about $170,000, your mortgage would be $700,000. Okay, and then at a 3.125%, your payment's $2,999. So according to this data, home prices are anticipated to continue to rise at a pace of 1% per month until the end of the year. So we're in April. April just started. If we increase 1% each year, that's going to be 8% from now to the end of the year. So at an 8% appreciation, that same $875,000 home is now going to be selling for $945,000. Okay, so we put our 20%. So now, we have to put more of a down payment, and because 20% of 945 is going to be higher, we're going to have a loan of 756 instead of 700, and we are expecting rates to rise to 3.75%. So the monthly cost, so your payment, instead of being $3,000 today, it's going to be $3,501 in 8 months, $500 every single month. So that is crazy, guys. $500 a month, and not just that. If prices go up 8%, which is going to be about, 45 plus 25, that's 70,000. 20%, that's an extra. What is that? $1,400 as a down payment. At 20%. So we expect appreciation of 8% from now to the end of the year. At the same time, the United States economy is revving its massive engine now, and that it's emerging from the depths of the pandemic. Excellent job reports, increased travel, massive personal savings surplus, and a return to some semblance of normal life will ignite the economy, and that will translate into a rise in mortgage interest rates. So it's already occurring. According to Fannie Mae, rates started the year at 2.65%, all-time low, and it has risen to 3.125%, nearly half a point higher than a few months ago. By the end of the year, they forecast 3.75%. Okay, so although rates are going up, they're going to continue to go up. The reason why that's not going to help your case if you're a buyer is that there's still way too much demand and not enough inventory. Okay. So, I mean, there's a news article where a rundown house in Mississippi was listed for $250, got 80 offers, 70 of them were cash and sold for like $460. Okay, so cash offers, 70 cash offers. So there's people buying cash, people who have 20%. People are not going to flinch at buying a home if its rates have gone up to 3.75. That's just the truth. Myself, I just bought a home. We just bought a home 6 months ago. I'm planning on buying more property. If rates go up 0.5%, that's not going to stop me. I'm still going to buy a property in the next 6 months, a year. So the rates going up is not going to solve the problem of the very, very, very low supply issue that we have, right? So there's such few houses on the market and way too many buyers. So I'm going to dive really quickly into the numbers, right? What do the numbers say? How many homes are there in the market? Are those numbers going up? Are they going down? Is the demand or the buyers, the loan applications going up, going down? Let's dive into that. And if you haven't already done so, hit the subscribe button. If you've hit the subscribe button and you're subscribed to my channel, hit the like button to spread this information and news to people that might find it helpful. Okay, so let's dive in to the supply and demand numbers in LA County. Okay, so the numbers here are for LA County only. So the current number of available homes to purchase are at a record low 7,185. So in all of LA County, there's 7,185 homes for sale. So how does that compare to history? Well, a 5-year average from 2015 to 2019. Okay, so if we take the average from 2015 to 2019, we're not going to count 2020 because the pandemic threw all the numbers off. Okay, so the average number of homes for sale in LA County from 2015 to 2019 was 11,470, or 60% higher than it is today. So today, 7,185 homes for sale. On average, there have been 11,470 homes for sale. That's a difference of 4,285 extra homes for sale in what we've seen in our recent history. So from 2015 to 2019, there's about 11,500 homes for sale. Right now, there's about 7,000. Okay, huge difference in the supply. Very low supply. Okay, so now let's look at demand. Okay, how's demand today compared to history? Okay, so we're looking at 30 days of pending home sales. Okay, so pending home sales is at 6,675 homes are pending, about to be sold in escrow. Again, if we look at the 5-year history, 5-year average from 2015 to 2019, that number was 5,933. So although there's such low inventory, there's still more houses in escrow today, 13% more houses in escrow today than there were on average from 2015 to 2019. Okay, so again, inventory is much lower, demand is much higher. So what can we expect if rates rise? Okay, so with rising rates, the inventory will finally rise from its unparalleled anemic low level, and demand will decline from its torrid pace. Okay, so as rates go up, it's going to adjust a little bit. Okay, so the result will be a market that is much more manageable to navigate, yet still a hot seller's market. Homes will still appreciate, just not at its current unparalleled pace. There will still be multiple offers, just a few generated on each property compared to double digits as of today. Okay, so what we're learning from these statistics on one last thing, the current active inventory. Okay, so besides inventory has dropped 2% in the last 2 weeks. So inventory has dropped even more in the last 2 weeks. So basically, yes, it's such a hot seller's market, very hard for buyers. Yes, it will get more manageable. Okay, but that doesn't mean that home prices are going to stop going up and prices are going to drop. It's not going to happen. Okay, so prices are still going to go up. So right now they're going up 1% a month. okay, which is about 10, 12% a year, which is what I've been saying. If you go back and watch my videos, that's what I've been saying is going to happen in the near future. Over the next 1-2 years, home prices are going to go up 10%. And that's pretty much across the country. So they may not go up 10. So if rates go up, oh my God, I'm going way too fast here, guys. All right. So as rates go up, the pace of home sales and the home prices will slow down, but that doesn't mean it's going to stop. It doesn't mean that that home that went from 875 to 945 now all of a sudden is going to drop back to 875. It's just going to increase at a slower pace. So that's really the only difference. So basically the short answer to this situation is, guys, don't wait. Just don't wait. I mean, do whatever you can to get into a property, because every month that you don't, you are going to pay 1% extra tax every single month. And if you wait a year, you're going to pay 10% extra tax in the form of higher rate and in the form of a higher price. Okay. So yes, although the rate at which the homes are going up will slow down, maybe it'll be 0.5% per month, or it'll be 6% or 5% a year, they're still going to go up. Okay. So you don't want to miss out on the appreciation, and then you don't want to end up paying more, 10, 15% more, if you wait a year and a half. So make it happen now. It's the same advice I'm telling my buyers. Hey, just keep in mind, you can continue to be picky, and every month that goes by, you're going to be paying 1% more to buy a house. So that's my suggestion. I mean, that's what I've been saying. I don't see things slowing down anytime soon. So hopefully this motivates you to keep going. If you're one of those people who've been putting in offers, not getting your offers accepted, do not stop. Just keep in mind that, hey, as soon as I get that home, just envision yourself, as soon as I get that home, I'm going to be a part of this appreciation, right? As these homes continue to rise in value every single month, every single year, I'm going to be part of that. I'm going to benefit from that happening. And I hope you guys all do that, because the housing market, fixed assets are going up in value. The more money that's being printed, it's just smart to have your money in assets like real estate, collectibles. Now everyone's into collectibles, NFTs, Bitcoin, stock market. Everything's just going to continue to go up. So you don't want to have cash. You want to have real assets. So that's my 2 cents. Hope you guys found this update valuable. Please, if you haven't already done so, hit the subscribe, hit the like button, and I'll see you guys next time.